The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Middle East tensions, weather, and more, the big drivers in the market trade as we start the new week. And of course, as we watch the Middle East, we've seen Iran now retaliate against U.S. bases in Qatar and Iraq. That news as of midday Monday. What's the impact in the markets of that escalation, or are we maybe nearing some pause in diplomacy? We've got to talk about all that and also, again, talk about the weather and more. Joining us now, John Heimberg with Total Farm Marketing here as we take a look at what's happening in Monday's market trade. John, good to have you back with us. And looking at this whole situation, let's start with the Middle East as after the reported missile attack, crude oil down over 5% in late day trade Monday. And you know, I would initially think, okay, a missile attack on U.S. bases, I would assume crude would be up 5%, not down 5%. But this whole situation's been a bit of a head scratcher here throughout the day, John.
It has been. And again, there's just a lot of different things working the market. Now, we were up 5% on the overnight, with that strong trade after the U.S. dropped those 30 cutter bombs over the weekend and those bunker cutters. So now we get the retaliation. Now, here's the best thing we can put together in this. If we go back to an earlier situation between Israel and Iran, here came the retaliation that was kind of well handled and everybody knew it was coming. And that was the de-escalation point of the whole conflict. And I think the market might be feeling that again today. Okay, U.S. got done what it wanted to get done. Israel's got done what it got done. Here comes Iran with some retaliation to save a little face in terms of their people. And then this thing might be coming to a slow end. At least that's what the market's saying today. Stock market rallied, dollar fell apart a little bit this afternoon. Crude oil obviously really fell apart off those highs to the point we're trading almost $8, $9, $10 off the session highs here as we get towards the late afternoon. So with that, we'll have to see what happens from here. Is there any additional follow through? Anything coming out of that? Just sounds like the rhetoric has gotten quieter. President Trump came out this afternoon and said he wouldn't need to do anything more unless he needed to, kind of basically saying that, hey, we're out of this now again, unless things continue to just kind of percolate. I mean, obviously that's been the big factor in the outside markets today, grain markets today. It's all about weather, just money flow, things of that nature. But right now it just was a difficult day to start the week in the grains, especially led in that corn and soybean market after, some pretty soft closes here at the end of the week.
Let's talk about the grains more. And really, again, you mentioned it, back to weather. And it's been something that I felt like the trade has almost been keen to the fact that the crops needed some heat on them here after a relatively cool start to the growing season. You couple that with just some of the trends of funds the last several Mondays, they've kind of taken a little bit of profit out of these grain markets here. It just seems like it's a combo of those two things across the board, John.
It is, and it's actually more things than that, even in my mind, as you just start doing let's check the boxes here, what's good, what's bad in terms of the marketplace. There's just not a lot of fear right now to be a buyer in this marketplace at this time frame. Obviously export inspections, good number there again today, but we're kind of getting numb to that we're just selling and shipping corn off the old crop, but that new crop side is just going to be a pretty decent sized crop. I think you got the market looking at a bunch of different factors. Number one, we got acres report next week. The anticipation that U.S. corn acres could be on the increase from that March number seems to be fairly high in the marketplace, even though we got some private analysts today that were thinking maybe a little bit softer. Again, we'll see. Number two, obviously the weather. It's 95. It was hot. It was humid. And, here today we're pushing 90s plus in Wisconsin. But again, it is also summer and it's not a prolonged event. It was 3 days. It might stress the corn a little bit, but boy, I sure saw some things really jump while I was on, off last week, just because of that warm weather. And it's not like the radar is bone dry. Got rain chances coming through again, through the Midwest and the Corn Belt here over the next handful of days. You look at those extended forecasts, above normal temperatures, above normal precipitation. That's a greenhouse type event. That's not anything that's concerning to the grain markets at this time frame. And obviously there are areas out there that have missed out on some rains, and we're going to hear some stress stories out there. 17% of the corn ground is still in some form of drought, so they need timely rains if the air temperature stays higher. But at this time frame right now, we feel like we got a pretty good crop coming. And with that large South American supply kind of balancing out any concerns in the near term, this market is very, very comfortable being on the short side. And we've been seeing that, especially on these Mondays, if nothing happens over the weekend to make the market nervous.
Something else I've been watching too, this corn market, which has just continued to struggle. I'm starting to see more folks posting about more three handles when it comes to the cash bids in the countryside. And we've been seeing three handles, but start to see more of them in, say, Iowa, Illinois, which I think that in itself kind of points to just this corn market that doesn't have a story, and it just continues to matriculate its way to the downside here, John.
Yeah, very much so. And, maybe there's a big outlying event still coming. Don't forget back in January, USDA took 4 bushels off the acre, what looked like a pretty good crop of corn coming. Maybe we find out down the road that was too much. That won't happen until we get to the September grain stocks report. But maybe this market's, even with the strong demand, we're trading a 1.5 billion bushel carryover instead of a 135. That maybe only a bushel or 2 or 3 could have came off, and that was overstated. That's that's just the way the market's been acting. Even the cash side, if we were as tight as that we think we are, you would have seen it in the cash market. It just hasn't really responded in most areas in that regard. I'm still looking at some downside targets here. This 435 on December area that continues to kind of hang in there, 433 3/4 on the close today, even though that is a new low close for the move here. We do break it. The technical side points down into the 380s as a bottom side, longer term destination target. So again, if the market's thinking we got more corn out there, maybe that demand, which I might agree with, is overstated on that 25-26 balance sheet, that can come down. Next thing you know, we're at 2.2 billion. It could happen very, very quickly. And I think that's a little bit of what the traders are kind of betting on here. My fear is, as long as the weather stays good right now, they're going to push this thing pretty hard into that acre report next week, and then we'll get the new goalpost set, and that might be a spot if it's a little bit of a surprise, less acres than we think, or something along those lines, that maybe that could be a bit of a turning point. But I'm not saying that's going to be where our low is for the year in that regard, as long as the weather continues to stay good.
About over in the cattle complex, let's talk about that. Kind of a mixed tone Monday. It looked like retailers blinked a little on Friday with the way we've seen boxed beef and much more. And we got the cattle on feed report, of course, on Friday that I'd say was neutral to friendly, but it just seems like the cash trade, boxed beef, all of this is outweighing that friendly number that we got on Friday, John.
To me, it feels like you got two different markets. You got a cash market, and then you got a futures market. I'm not sure how much they're correlated when you start just looking at the values of where things are. I mean, cash trade, was down last week, so maybe we're seeing a little bit of a peak in cash markets. I know we got some lots that are pretty current out there. They've been moving cattle along, which is understandable given the prices that we're getting paid. So maybe the packers want to slow the chain down a little bit here, get some of those weights back up. They've been importing a lot of beef in terms of Australian, Brazilian beef at record levels. That's getting put into the ground beef trade, to kind of balance out the market a little bit. So we'll have to see how that plays. But you're still looking at premiums of cash, $15 over top to June. Then you got August trading another $13 under that. So to me, it feels like the futures market's a little bit undervalued here. But now with that, trends are friends and money flow and things of that nature. We did hold a pretty key support today around 208 on that August contract. If that does break, we got another $4 or $5 that probably fall. Unfortunately, the door's not very wide, and a lot of people may want to get out the door, if you know what I mean, in that regard. So we'll have to watch some technical things like that as we go this week going forward here. Cattle market still, even with that cattle on feed report, still tells me that cattle numbers aren't there. Until we see something change on that Mexican feeder cattle import ban, which doesn't sound like it's going to happen for a long time. The cattle numbers are not there, and the cash market feeders continues to be very, very strong. When you look at the index today, it's trading $8 above August. That futures market looks a little bit undervalued there. And I know from talking to producers on what's out there in the cash market, it's a lot higher than that 310 index in terms of what they're seeing at the sale bar in terms of buying feeder cattle. So it's a market in my mind that kind of may just grind here for a while, move on some technical factors, but the fundamentals are still friendly for another push. I think anytime we get some sell-off, we're just working to the bottom of the range, and that's probably another opportunity to be back on the longer side.
How about the hog market? That has been fairly well supported here as of late. What are you tracking on that side, John?
Yeah, we got that June contract out of the way, and then all of a sudden July just kind of picked up and kicked in. Gap open a handful of days ago. Another good, nice push higher again today. So, where are we headed? 115. That's an upside target I had on that July. Kind of feels like we got some momentum, in terms of the cash market, in terms of the retail trade. You got, index up $1.20 today, or close to that. So right now it just feels like money wants to own hogs a little bit here. Maybe it's just finally a little bit of a backstory to the other side of the live cattle market. That maybe some of the spreads might be coming into play or something there as well. But those summer months look pretty friendly. There's going to be some really good value and some opportunities here for producers as we continue this climb. So watch for that window. But right now we're stretching out this rally nicely here in the hog market.
John, good thoughts as always. Final thoughts from you? Anything you want to mention or reiterate for producers here today on the show?
I know prices are not comfortable at 430 December corn or 1050 November beans, or a little bit under that. But again, there's a lot of chance for value to go the other way. You can see how fast the market moves. We didn't touch on wheat today with that, strong reversal last week, and just another fairly strong selling day today as the money just flowed out of that wheat market. The volatility is going to be high. Maybe this market will give us a chance somewhere yet with a quick run, but I have a feeling it's going to be pretty short-lived. So make sure you're ready to take care of business if that run does occur. But at the same time, make sure you're still protecting what value are now. I just talked about 380 target levels for December corn. That's still 50 cents from here. That's a pretty big move. Puts are cheap. You can easily keep a floor underneath. Hopefully they go worthless and this market rallies all the way through harvest.
John, if folks want to reach out for a conversation with you there at Total Farm Marketing, I know a few ways to get in touch. How can they reach you, John?
Just give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
Appreciate the time. Glad to have you back, and hope you had fun on your fishing trip last weekend up in the Northwoods, John. Did you catch anything big?
Yeah, we got one for the wall. I was kind of hoping to get a trophy walleye out of there, so we pulled one out here on our last day and the last morning, and the fishing was tough overall with the weather, but that was a nice pickup. And he's at the taxidermy office here for the next 9 months until we get him back. But I'm looking forward to it. So I finally got a fish for the wall.
Always good to hear that, and glad you had a good time. And again, happy to have you back. With that, John Heimberg, Total Farm Marketing. Thanks for joining us on Market Talk. Have a great week, John. We'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.